Hi, my name's Adam. Welcome to the channel. Thanks for joining us today. Today we're going to go through a much anticipated video, one that's been requested maybe more than any other one, and that is LIRAs, or LIRAs as some people pronounce it, but the locked in registered account. So in this video, we're going to go through 5 different things. So we're going to cover what a LIRA is, the difference between a LIRA and an RRSP. We're going to go through how you can get money out of your LIRA early, like before retirement. How do you get it out? Then we're going to go through when you hit retirement, what happens to your LIRA, and also what's unlocking. Okay, a lot of you have heard of, okay, I know I can unlock, depends where you live. We'll cover that in this video. And then the last thing, we have some strategies that we use when we build out a financial plan. If you have a LIRA, you're going to want to stay tuned for that because we have some tips and tricks that we use with our clients that are really successful. So we'll cover that in this video as well. So let's jump into it. What is a LIRA, or a locked-in registered account? A LIRA is a registered account, much like an RRSP, but a LIRA has come from a pension plan, a company pension plan. So somewhere where you used to work, they had either a defined contribution or possibly a defined benefit plan, and you've taken that out when you left the company for whatever reason it is, whether it's retirement or early retirement, or you've moved on to a different employer, and you've had to move that money out of the company pension plan. You have to move that into a LIRA. Okay, you're unable to move that to an RRSP. You have to move it into a LIRA account. So that's essentially how you get a LIRA in the first place. It's from an old defined contribution or defined benefit pension plan from a previous employer. So a locked-in registered account is designed to be a long-term income generator in retirement. Okay, and that's why the federal government has basically said, look, if you've moved from a defined contribution or defined benefit plan, which are built as pension plans, ongoing, monthly pension payments to you in retirement, if you leave that plan, you need to put it in a similar product or a similar solution. And that's what a LIRA is. A LIRA is built to kind of build up to retirement, and then when you hit retirement, to give you an ongoing income stream. Okay. Now, you can invest your LIRA just like you do your RSP, your TFSA, or any other investment account. Okay. You can put it into a high interest savings, invest very safe, no market risk, or you can put it into stocks, bonds, ETFs, whatever you want to put it into, whatever your risk criteria is. But you can invest it much like any other account. Okay, we've had that question a lot too. Like, can I do anything with my LIRA? Yeah, you can invest it, grow it, and hopefully you do. Typically your RRSP and your LIRA, if you have both, typically those investments and the investment risk and structure is fairly similar to each other. Okay, they're similar accounts. You want to grow these up to retirement. So if you have both accounts, or if you've had an RSP and you like it and it's working well for you, and all of a sudden you have this LIRA that come in, you may want to consider investing it much like your RSP if that kind of meets your risk criteria. So talk to your investment professional, do kind of an online risk assessment to see kind of where you fall within that platform. Now, the last key point on the LIRA is every LIRA is registered in either a province or a territory. Now, if you're federally regulated, it's going to include the territories as well. Okay, so all 10 provinces, and then you have your federal legislation or your federal registration, and that includes the territories. Okay, now that's very important. Okay, where your LIRA is registered is one of the most important parts of that LIRA. Okay, and we're going to cover why later in this video, but you want to know where your LIRA is registered. And just because you worked in BC and your company was based in BC, it doesn't mean it's a BC LIRA. Okay, it could be a federal LIRA, it could be an Ontario LIRA. You need to understand where that LIRA is registered because that's going to allow you to unlock it and things you can do down the road. Okay, so let's jump into the difference between a LIRA, or locked-in registered account, and an RRSP, a retirement savings plan. Okay, they're very similar, but there's some differences that I want to cover in this. So first off, the LIRA is locked in. Your RRSP is not locked in. If you built up an RRSP and you hit 50 and you have an emergency, you can pull the whole thing out. It's taxable to you, but you have access to the full amount, okay, minus taxes. With a LIRA, you can't do that, okay? You can't say, hey, I want to buy the new ski boat or do this or do that, upgrade my home. That LIRA is locked in. It's a locked-in registered account, okay? You're unable to access that. Now, we'll go through in a second. There are a few ways, not many, a few ways to get it early. But in general, 99% of you will be unable to unlock or get money out of your LIRA before retirement. So an RRSP and a LIRA are very similar in the fact that when you hit retirement, so when you start drawing money out of these accounts, so you convert your RRSP to a RRIF and you convert your LIRA to a LIF, a life income fund, okay? When you do those conversions either way, there's a minimum amount that you have to take out, and that's based on your age, okay? So when you hit a certain age, let's say you're 60 years old, you have to take out a certain amount. So the minimum amount at age 60 is going to be 3.33%, okay? So on an RRSP or a LIRA, when you convert them to kind of an ongoing income stream, a RRIF or a LIF, you have to take out 3.33%. So if you have $100,000, that's $3,330 take out of there. Now, the difference is on an RRSP, there's no max. You can take out the full $100,000. It's going to be taxable to you, but you have access to it. When you convert to a LIF, you have a maximum amount that you can take out, and this is very, very important, okay? So in a LIF, depending if you're, like what province your LIF is registered in or if it's federal, you're going to have to take somewhere between 6 and 7% is the maximum amount you can take out of there, okay? So again, a LIF, you have a minimum and a maximum. With a RRIF, you have a minimum and no maximum. Okay, there's more boundaries on that LIRA or a LIF when you convert to start taking income out of it, okay? So when you hit retirement age, if you have both an RRSP and a LIRA, basically what happens is when you need to start drawing money out of either or both of them, your RRSP will convert to a RRIF, a retirement income fund, and your LIRA will convert to a LIF, a life income fund. So now let's quickly jump into a few ways that you can get your LIRA out early. And again, this applies to maybe 1% of you. So I'm just going to fly through it. We'll put more details below. We'll put a link below with more details. But essentially, there's just a few ways that you can get money out of there early. So if you have a reduced life expectancy, that's one way. If you become a non-resident, that's a second way. If you have financial hardship, that would be a third way. Or if your LIRA is a very small amount. And again, all four of these have parameters around them. To go more into detail, if you think you might fall into one of those, again, we'll link it below. You can read more into it and see if you qualify for any of those four. But I will say it's probably less than 1% of you that would actually qualify to unlock your LIRA early. So probably not likely, but again, if you think you fall into one of those, non-resident's probably the number one reason. But we'll put the link below. You can read more about that. So what happens to your LIRA when you hit retirement age, or maybe even a bit before retirement, okay? So basically, like I mentioned earlier, you convert your LIRA to a LIF, a life income fund, and that's basically the conversion. And again, it's not selling stocks or selling your mutual funds or ETFs or whatever you own in investments and buying something new. It just rolls over naturally, much like an RRSP to a RRIF. It's just basically you're changing the umbrella, okay? So it's sitting under a LIRA. When you're ready to start taking income out of it, you move it over to a LIF. But the investment kind of just transfer over as there, okay? No big change there. So you can either go to a LIF, a life income fund, or you can convert your LIRA to a life annuity, which is basically an annuity, which is something that pays an ongoing monthly or annual or bi-weekly, however you want the payment set up. It's an ongoing income stream, okay? It's a guaranteed income stream, it's a set rate, and it just pays it for life. It's much like a pension plan. Now, typically, especially right now, annuities pay a very small rate. Like the interest rates are really low right now. So annuities probably aren't your best bet, but do your due diligence to see what, is the right fit for you. I do have a video coming in a few weeks on annuities. So if you want to learn more about annuities, I'll be doing a video on that in a few weeks from now. We're going to cover all the types of annuities, if they make sense right now, and they do make sense in some situations. We're going to cover that in that video as well. So that's coming out in a few weeks. So stay tuned for that. Before I jump into the main part of this video and the details that most of you are looking for, I just want to stop for advertiser. No, just kidding. It's if you haven't joined our channel, if you haven't subscribed, hit the subscribe button below. We want you to be part of the channel. Still, most of you watching our videos are not subscribed to the channel. Hit the subscribe button. It takes 1 second. It costs you nothing. And if you enjoy these videos, if they're giving you the content you need and helping your retirement plan, hit the thumbs up. It really does help get these videos out to more people. Hits that YouTube algorithm, which is a really weird thing, but does help get our videos out. And more Canadians need better financial literacy, financial content, and just information around retiring. And that's what this channel provides. So if you enjoy these videos, please hit the like button, hit the subscribe if you're not joined, and share these with people. We do appreciate it. So if you've come to the point in your life where, you've built up this LIRA and you're time to, start taking money out of it, or, in general, you're past 55, whether you want to take money out or not, you could start to look at converting to a LIF and start taking money out. Now, there's this big factor, this big, elephant in the room, and that's unlocking, okay? You can unlock part or all of your LIRA depending on which province or territory you live in, okay? And this is very important. We're going to put a link below. So parallelwealth.com LIRA, you're going to find all the information on this. We'll have graphs and downloads and links and all the information you need to have. But essentially, depending on what province you're in or territory you're in, you're able to unlock, again, none, some, or all of your LIRA when you convert it to a LIF. Okay, so if you're in BC, if you have a LIRA in BC and you want to convert to a LIF and start taking out, you can unlock none, zero. BC is actually, in my opinion, the worst. You can't unlock any of your LIRA currently. Hopefully this changes down the road, but you're unable to unlock any of it. If you move to Alberta, you're allowed to unlock 50%. Okay, if you go all the way to Manitoba, you're allowed to lock, just recently changed on October 2021, you can now unlock 100%. It was 50%, now you're at 100%. Saskatchewan is also 100%, okay? If you have a federal LIRA, it is 50%. And again, Ontario is 50% as well. So most allow some unlocking, some not at all. So step one would be to figure out what your the legislation is or the registration is behind your LIRA. Figure out what province or territory it's in. Is it federal or is it a provincial, and what province it's registered in? Okay, that's step one. Step two is then click the link below, again, parallelwealth.com/LIRA, and find your province. And then scan over and see if you can unlock. If you can, then what age you can unlock, okay? And basically what unlocking is, this is where the confusion lies. Unlocking isn't, getting all the money out tax-free or 50% of it out tax-free. Unlocking is moving, let's say you live in Ontario, which I know a lot of our viewers do, okay? Unlocking, when you convert it from a LIRA to a LIF, so let's say you're 55, 60, 65, doesn't really matter. As long as you're past that 55, you convert to a LIF. When you do that process, you want to move 50% of it to an RRSP. So unlocking your LIRA moves whatever amount you're allowed to unlock to an RRSP, okay? It doesn't mean you cash it out as tax-free or it's even taxable. You just move it to an RRSP. Now, once it's in an RRSP, technically you could cash it out and pay the tax on it, sure. But again, if you're able to unlock, and again, BC, Quebec, New Brunswick, some of these provinces you can't unlock anything, okay? But most you can, okay? So check which province or territory you're registered in, and hopefully you can unlock, okay? Again, Saskatchewan and Manitoba are your two best right now. So if you have a LIRA there, you're able to unlock the full amount in RRSP. And again, the unlocking is just moving that percentage to an RRSP. Let's make that very clear, okay? A lot of you get confused by this. So when you hit a point where you can move your LIRA to a LIF, if you're unable to unlock any of it, make sure you do the full amount. Unlock the full amount that you're able to, 50% or 100%, and just move that allocation to an RRSP, okay? Now, why do you want to do that? Why do you want to unlock money? Well, like I mentioned earlier, an RRSP and a LIRA are similar when you convert it to income generation, okay? So a RRIF and a LIF, very similar, except that your LIF, which comes from the LIRA, your LIF has that maximum amount, okay? Now, what does that mean? It means that you kind of have parameters when you're in retirement to draw income out of there. If you need a big lump sum out of there, you can't get it. You can do that out of an RRSP. Okay, so as much as we can get out of that LIRA to an RRSP or out of that LIF to eventually a RRIF, we want to do that because it creates way more flexibility, income flexibility, all that in retirement. And I should say, I mentioned New Brunswick earlier on, no unlocking. There is a bit of unlocking provision for New Brunswick. Nova Scotia and Newfoundland have 0%. So Quebec and BC as well. So there are a few that have 0, some have 50, some have 100. So let's just make that clear again. The link's below. Click the link, look at the chart, see where you fall within your registration, your LIRA, and if you can unlock any of it. But again, if you're able to unlock, I can't stress this enough, you want to unlock it. You do that when you hit a certain age, when you convert from a LIRA to a LIF, when you want to start drawing money out of it, that's when you do this whole process. Okay, so let's say you have 100,000 in a LIRA and you're in Ontario, okay, and you're 60 years old, looking to retire and want to start drawing an income. You basically, of the 100,000 in a LIRA, you go to your investment person or bank or wherever you invest, wherever you hold that account, and say, look, I want to convert to a LIF and I want to unlock the 50% I'm able to, okay? So 50,000 of that would go to a LIF, a life income fund, and 50% of it would go to an RRSP, which you could then convert to a RRIF. So in the last part of this video, I want to go through 3 strategies that we use with our clients that really kind of maximize a LIRA, maximize a LIF as much as you can. Again, there's a lot of parameters on these accounts, so you want to make sure that you're planning ahead and using these accounts properly, especially when you start drawing money out of it. How do you do it, timing, all that kind of stuff. So I want to go through 3 tips that we use with our clients that have really helped them kind of maximize their LIRA. So tip number one, and I said this earlier, is to make sure you unlock the maximum amount. If you're able to unlock, if you're in Manitoba or Saskatchewan, unlock the whole thing. When you hit retirement and start drawing in income, you should not have a LIF anymore. It should all be in an RRSP or a RRIF at that point, okay? Unlock as much as you can, whether it's 50% or 100%, get as much as you can over to an RRSP. It creates way more flexibility for cash flow, doing the RRSP meltdown. A lot of the tax strategy that we'll employ within a plan is built on the RRSP, and having that LIF, that life income fund, really kind of puts parameters on the ability to melt down your RRSPs. So the second tip is you want to start drawing down the maximum amount out of your LIF as quickly as possible. Okay, so when you hit retirement, that needs to be the number one account that you start drawing out of. Okay, so if you have an RRSP, let's say you have 100,000 RRSP, 100,000 in a LIRA, and you convert them to a RRIF and a LIF, you want to start drawing down that LIF, maximum amount, and then top it up with the RRIF. Now, if you don't need all that money, maybe hold off converting your RRSP to a RRIF so that you're not forced to take some money out of there. Just do the LIRA first. So LIRA to LIF should be the first conversion to a retirement income stream. Because you have that cap on the maximum amount to take out, you want to convert as early as possible to start redeeming that maximum amount. It's hard to kind of get your LIF to zero by your mid to late 80s, right? A lot of LIFs will run into your 90s. So start early and start the maximum amount as quickly as you can. So the third tip for retirement is, if it makes sense, and I'll go over that in a second here, but if it makes sense, move your LIRA to a LIF anytime after 55. In Alberta, you can unlock as early as 50, but most provinces and the federal LIRAs, you can unlock from 55 on. So if it makes sense for you, if you're in a low tax bracket right now, maybe you're working part-time, maybe you're not working at all, you want to start drawing this as early as possible, okay? So whether you can unlock or not, you want to convert to a LIF and start taking out that maximum amount or up to that maximum amount, depending on your other income, okay? So again, if you're not working or you're working part-time, you want to start taking it out, top up your income a bit, okay? If you're paying in a low tax bracket. Now, if your income in retirement is going to be the same as it is now, then start taking some of that LIF out now. Now, for some of you in retirement, your income is going to be higher than it is now, okay? Then definitely start drawing down that maximum amount of that LIF account as possible, okay? If you're going to be in a higher tax bracket later than you are now, which a lot of you fall into, start drawing that down now, take it at a lower tax rate, pay the tax, and kind of move forward. But essentially what you want to do is, as soon as it makes sense, convert to a LIF past age 55 and start drawing down up to that maximum amount. Now remember, you have a minimum amount. So if you have a really big LIRA that you have to convert to a LIF, like if you're in BC, and we've had this, a client with $1 million LIRA. Well, if you convert to a LIF, right, it's 100% goes to LIF. You can't unlock any of it. So now you have $1 million LIF that you have to start taking a minimum amount on. Depending on your age, you might be forced to take, 3-4%. Well, now you're taking $30,000 or $40,000 of income, and you have to. Okay, so just be aware of that. You may, if you're in a province where there's zero unlocking like BC, you might want to unlock part of it, not the whole thing, or just be careful of that. Okay, remember, there's a minimum as well. There's also that maximum. So just be aware of that. If you have a really big LIRA, especially if you can't unlock it, just be aware of that minimum amount. You don't want to convert at 55 the whole $1 million LIRA, have a bit of an income, and be stuck taking way more income than you want to take. So hopefully this video cleared up a lot of the confusion around a LIRA. Again, we're going to put a link below. Click on there. It's a web page that we built. It covers all, everything we've talked about today will be on that web page. So if you need links, if you have an Alberta pension, what can you do with it? We'll put a link there that you can kind of click on, follow through, learn more about it. LIRAs are very confusing, and the pension legislation behind them can be very, long-winded sometimes. So hopefully this kind of summarizes it, okay? Essentially, LIRA comes from a defined contribution or defined benefit plan, okay? An old company pension plan. That's why you have a LIRA in the first place, okay? You build it up like an RRSP. When you hit retirement age, or at a point where you want to start taking a bit of retirement income out, then you're converting it from a LIRA to a LIF, okay? That's the conversion. Much like an RRSP to a RRIF, a LIRA goes to a LIF, a life income fund. Now, again, certain provinces, territories, you can unlock 50 or 100% of it to an RRSP. Okay, unlocking just moves, you don't have to go to a LIF, you can go to an RRSP, which eventually would go to a RRIF, okay? So keep that in mind. Now, hit retirement, you convert it to a LIF, there's a minimum and there's a maximum that you have to take out. You have these parameters, and that's why LIRAs are not a great account in retirement. But again, a lot of you have it because you had a pension plan, right? You're forced to have it, and that's fine. Hopefully it's legislated in a province or territory where you can actually unlock 50 or 100% of it. But if not, make sure you have a good plan around that. Okay, again, this is a kind of a parameter investment account, we call it, where you have that minimum maximum. It needs to be built into your overall financial and tax plan quite strategically. They're a lot harder to draw down. They need to complement. And again, you want to start drawing that down as much and as early as possible when it makes sense from a tax perspective. So again, hopefully this helped. Again, click the link below. There's more information there. Thanks for joining us in this video. We'll see you in the next one.